You are on the Transparent FX Academy. I'm Nick, and I'm a top potter on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns to show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. In today's video, I want to speak about NZDCAD, which is a quite interesting pair for a potential opportunity. And as usual, I want to keep this a multi-time frame analysis as educational as possible. So first, what I will be doing is covering what we have from a multi-time frame technical analysis on the pair, and then we will go and see what we have from an order flow perspective, which is the commitment of traders, so the COT data, which is basically what the non-commercials in the market are doing, which are the biggest speculators in the market, so basically hedge funds. And by the end of the video, by using the combination of these two different types of analysis, we will be able to understand where we have the highest probabilities for a potential trading opportunity on the pair. So without further ado, let's get straight into it. And as I just said, I will be keeping this as educational as possible. Now, starting here from the monthly time frame, what do we have? Now here in the monthly, we have a market which at the moment is breaking below a quite important structure area. In fact, this zone was acting as very strong previous resistance here. The market then broke above the zone, and at that point, the previous resistance was turned support. And as we usually expect in this kind of situations, the market went for the retest of the previous resistance turned support and respected it as support, starting this rejection to the upside. The market then went and tested once again the support and got rejected to the upside, and currently the market is breaking below this structure. And if in 8 days we will actually see a confirmed break and close below this structure, what we can expect at that point is for the market to go for a retest of this previous support, which at that point will be turned resistance, and then for the market to provide a continuation to the downside. So at the moment, what we can expect is a short-term retest of the structure, and then the continuation to the downside if the market will successfully break below this structure. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see that at the moment the market has just broken below a quite strong structure area. In fact, this zone also on the weekly was acting as previous support here and again support here. The market last week also created this candle here. Now, when you see a candle like this with a very long wick and a red body, what you usually expect is for the next candle to fill in the wick and basically provide the continuation to the downside, which in fact is exactly what the market did. So here on the weekly as well, since the market has now confirmed the break below this weekly support, we can expect the market to go for a weekly retest of this previous support and resistance before the continuation to the downside. So also here on the weekly, we expect a short-term move to the upside before then the market providing the continuation to the downside. Just a quick reminder, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily time frame, what do we have? Now here on the daily, the structure is quite clear. We can see how the market has just completed this impulse correction and impulse pattern to the downside. Now, when the market was here, I made a full breakdown explaining all the reasons for which, from here, we expected the market to start this move to the downside. And in fact, that is exactly what the market did. And by the way, I will link in description this previous analysis, so you can go and check it out for further reference and more free education. However, at the moment, what do we have and how we can be looking for the next potential opportunity on this pair? Now, before I show you what we have on the daily, let's first go and see what we have from a COT perspective. So commitment of traders, which is, as I said at the beginning of the video, what the non-commercials, so the biggest speculators in the market, are doing. Now, if we check the data for the NZD, what can we see? Now? Here on the NZD, we can see that lately with the last reports, net positions have been increasing. In fact, we went from having 2.5k net positions all the way up to having 8.4k net positions, with the longs getting increased from 18.9k to 23.6k, and shorts getting decreased from 18.8k to 15k from an institutional perspective. So the NZD is getting stronger. And if we go and see what we have on the CAD, what do we see now? Here on the CAD, we can see that we have been getting even stronger than the NZD, which easily explains why NZDCAD has been providing this move to the downside, because the CAD is way stronger than the NZD, with net positions rising from 2.4k to 46k, which is a massive increase, with 2.6k longs added even with the last report, and 4.7k shorts getting closed from an institutional perspective, reaching 82k long positions and 35k shorts. So the CAD is getting very strong. Therefore, if we are to be looking for any kind of potential longing opportunity here on NZDCAD, it's just a short-term move to the upside before more continuation to the downside can follow. And if we look at the structure that we have here, also on the daily, we are simply confirming what we have on the monthly and weekly. The fact that we expect a short-term correction to the upside before then the continuation to the downside. In fact, the market here has just created this M pattern, which could easily become an overextended M pattern. And after the creation of an overextended M pattern, what you expect is for the market to provide a completion at the previous support and resistance, which is also the neckline of the pattern itself, before the continuation to the downside. So there is first a short-term longing opportunity and then a longer-term shorting opportunity. And how we will be approaching the first potential opportunity, which is the first short-term longing opportunity. As usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. But when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from an intraday bearish market as we have to an intraday bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding NZDCAD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete the pattern at this previous support, term resistance, which is the neckline of the M pattern itself. If you enjoyed the video, make sure that you smash that like button and comment below. Also, you can go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all my rule-based strategies. Then you trade the strategies with me. In fact, every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also get a Q&A session every day in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.